Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's October 16th. This will be our chart lesson for the day. And this we traded higher today and broke higher and traded back a little bit. This looks congested right here. I would expect that we'll probably try to make a new high here on this trend up at a very minimum. Maybe we can't get that and it turns back down. I just don't know. But it looks like we're trying to make a retest here on this high. We did close above the midline again today. Um, so we'll see what tomorrow brings. My expectation would be that we're going to try to at least push up another bar and make a new high. Uh, this is a fairly bullish day. Looks bullish on the 2000 tick chart as well. We did close off the highs, but still a mostly up day, and we closed much higher than, we closed extremely higher on the daily chart. You can see it's almost 50 points higher. So definitely a bullish day, and we did close off the highs, but my expectation is we'll probably push high. That's what you would expect. Now, whether or not that happens, we'll have to wait and see, but that's my expectation. So, but let's flip over to the 2000 tick chart. Take a look at what it looks like, go through the trades, and we'll wrap this day up. And what we have here is a big spike and channel up. Now, this is an uptrend. It had some really bullish moments and then some really bearish moments. But because this is so flat and prices are going above and below the EMA like that, you can trade this both ways if you get a setup. So just keep that in mind. It's a little different than if we had a real, now right in here, I don't dare try to take shorts in here, but once we've turned over and we're below the EMA, this is almost like a range in here, and prices are going from one side to the other. We didn't quite get back up to the highs today, but that's what prices did. They went from low to low, and then they tried to work back to high again. So it works very much like a range. You got your strong support down here, and you got your strong resistance up here, and your midline. You can see how we played off that midline really from about 10 o'clock on. We're just playing that off that midline. We did run back down to the lows one time on this break of this yellow channel or khaki channel, and then we just kind of chopped back and forth around the EMA after that point. So that's a spiking channel. So that's the way I would describe that. And we did have a 7:30 a.m. news item right in here, so really you didn't get any setups till after 7:30, and it was really close to 9 before you had a really decent setup. But let's zoom in, take a look at it, and go through the trades. It didn't look very, it's up here, but it doesn't look very bullish early on. But this thing took off, and it was really hard to know where the upper side was because usually you'd bet off this being the midline and then the next high, and so you just have to keep working until it finally turns down or fits, and then you can see it does fit really well across that midline all the way through the rest of the day. So I'm pretty confident we got it right in the end, but you almost had to wait for it to make a new high because I was looking for this to be the midline, and then later I was looking maybe at this, and it ends up being, the midlines ends up being in here. So I was close. I think at one time I had it even right here, and it looked okay, but it turns out it's a little bit higher than that. So sometimes you just, because this is such a wide channel, you don't know until it finally tops out, and sometimes you're just kind of guessing at that. So you definitely didn't want to take any shorts in here. You wanted to get this trend working lower before you start taking shorts. But anyway, there it is. Let's zoom in here, try to get a little closer. Oops, didn't mean to do that. And go through the trades. And you can see 7 o'clock came as we're coming off this high here. And then we just kind of chopped around in here. There is a little spike up, but this bar is at almost 740. Well, the news is already out. But obviously it turned, it didn't really affect anything in here during the news hour. And by this time you could get back in. And we're just getting regular price action here. I don't see anything I really like in here. There was a second entry here on the engulfing bar. If you took it, you got burned. I would wait. You really had a close outside down here. Is it convincing? Is it our price is going to ignore it because it was before 8:30. You don't know, so you got to be real careful in there. You want a really good setup, and that's just not it. So as you can see, you got the break and 2 legs down, and then it rallied, and then this one's tempting because you could argue there's a triple test across there, and it does set the trend line, but it's just too neutral, and that's definitely congestion. So you can't go long there, and then your higher lows way too far up here, and the next thing you know, you're going down. I don't see anything I like to the low side either. This is congested. Um, then we bounce down here, so you might be looking for a long here if it bounces, but you don't get a setup there. You do get a higher low here, but signal bar is no good. And then you get this break lower that fails and turns up. If it breaks higher there, that's a failure. And you probably get a scalp out of that. And it could go much higher. But because you got that resistance right across there, I'd be wary of this. I marked it green. And you would have got your scalp, but you just don't know that in advance. So this is definitely an aggressive trade. Maybe you take it, maybe you don't. I'm not crazy about it, but we did just prove this trend line with a couple of bounces, and then you get too high. A lot of times that's what it takes to take off, but it couldn't even do it. It just kept chopping sideways here. Again, you would have got your scalp out of it, but the problem is you got all that resistance. I didn't draw a line there, but hope you should be able to see that. You can see we've turned down there. Why can't I get it to stick there? 1, 2, 3 times. Notice it didn't go very far here, and you do get technically by the failure, it's right here. But this is just a higher low after a failed second entry short. You can't really take that failure because it doesn't set up right. And then you get this higher low, and so you're really taking a higher low into that resistance right there. And you can see it failed, but you would have got your runner, and then it goes again. By that time, you've kind of got this pink range going on. But notice you get a 1, 2, 3 triple test here. It's actually a tad higher than that. But you get the triple test, and you ran up, you ran down, so you should run back up. And it does. There's a higher low here, but you don't have room to get out. Then it turns back down, and you get a little failed break lower here. And you bounce once again off that proven trend line right there. Notice that there's a tick difference between this one and this one. And normally I'd tell you to ignore that inside bar on a setup like that. However, it's a failed break lower too. So the odds are if it breaks higher, it's going higher. So normally I wouldn't mark that, but just being 1 tick difference right off the key entry point, and it also being a second entry long on a failed breakout, I like that trade. So I marked it. It's a little different. You might argue for it to be green, but if you understand what's going on there, I think you're safe to take that trade. And it runs up. It looks like it's going to be a break of the channel and a couple of legs up. And then you come back. Notice you draw it off that trend line right there. There's a tighter trend line. Somebody will probably ask me, well, why is this not right? Well, it is right. There's a shorter term trend line in there too. So you can draw that one. And just because I didn't put it on there doesn't mean it's not there. So, but normally on a break and a retest, I don't put another trend line or another channel. And so that's the reason I don't usually mark that. But it's there. And so we could be going lower, but when you get a second entry right off another possible trend line, second entry long that confirms it, I'm probably going to take that trade. You might expect to get a new high here. And then notice you got a new low here, and you get a first entry, second entry. So that's a failure. And all that matching highs up there, guarantee you sell stops, or people that went short are putting their buy stops up there in case it turns back up, and you can expect there's probably going to be a trap there if they can break it higher, and sure enough they do. That's a quick move. So you definitely want to take that. Normally you got to be careful going long at 1, 2, 3, 4, 5 bar matching high like that. And really you might even argue 6, although this is higher. But what you have to understand is there's probably a lot of people getting short here after the break and the new high. Even price action people that aren't paying attention to this other possible trend line, this could be a spike in channel, and so they're buy stops for all these short for going short in here, and maybe some of them even went short in here, and they're giving it a little extra room. If it breaks above it, they're going to catch those buy stops, and you can see once it got a little momentum, new buyers came in realizing, hey, we got another trend line here, we're going higher. And once again, you get a leg down, a break, another leg down. I didn't measure these, but they're probably close to being a measured move. You can see that. Oops. Came up a little short. It's close. But you get your break, two legs to a new low, and then it takes off. And you got a matching highs here, so it's a new high. So first entry, second entry, and this actually broke lower and turned up. I would wait for this to close to make sure it's bullish, and then if it breaks above that, go with it. You get a little breakout pullback right here. Normally I'd tell you to be careful on breakout pullbacks, but you're expecting prices to make a new high. And you can see that it pulls back and then goes higher right there. It actually comes back and tests it again and goes higher. But I'm not crazy about that bar, and it does make a new low. So I'd want, and by the time it breaks higher, you got congestion right there. I'd wait. It does come back here with another second entry, but you've already got a break in two measured legs. So I'm very wary of that entry. You can see the break and two legs up, pretty much close to almost a perfect measure move. But there's two legs back. Since you already got a break, I wasn't crazy about this. It's only 5 ticks. It is a second entry. It is a decent signal bar. So if you took that, I'd probably give you a pass on it. If you took that knowing, say, hey, I know I'm being a little aggressive here. It's just probably not worth it, especially once you drew your line up here and these midlines look like they're kind of fitting back here. Although there's nothing too convincing yet. But when it comes back right in here, then you can be convinced. So that's another reason maybe you take it, because this is not a real convincing midline yet. Looks like it could be valid, but you don't have enough proof yet. And then we make a lower high here and turn down, and you get a first entry, second entry, and you also get a first entry, second entry short. Let me zoom in there a little more. But you can see that new swing high, it's higher than that one. So first entry, second entry that fails. So that's a failure when it breaks lower there. Plus you got a new low there, first entry, second entry. It's a little bit congested, but because you've got a failed second entry long and a second entry short right off a key entry point, maybe you take that trade. I marked it green. If you took it and you understood what's going on there, I wouldn't have any problem with it. You get a break here, and it's two legs back, and it confirms that main trend line, big bearish bar. That's your bread and butter trade. It doesn't get any better than that. You probably get a runner on this, and boom, off it goes. And you finally get a break here, and you get a leg up, and there's some correction there, maybe a couple of legs and some sideways, and then you get a second leg up. Unfortunately, you don't get that good signal bar on this one. And then notice it doesn't go lower, and it kind of stays in here. I wouldn't go long in here. This one's tempting. It's a second entry long. It's right, but it makes a new low, so maybe you wait on a higher low. One comes here, but it's right back into the trend line. We have already had a break up here, but I just don't see any good short setups that you could take. And then, of course, this one is really tempting. And I thought about making this green, but really you need a higher low here. But if you look at what's going on, you got a low right here before you get a break, and then this makes a new low. So this is the retest that makes a new low, and it is also a failed break out of that. So I've talked about how a lot of times those are important lows, and you get a lot of good runners out of that. So maybe you want to risk that. It's still early in the day. It's before lunch, and look at that thing take off. And you get a close outside the new high, and then you get a second entry short on a big bearish bar way away from the EMA, and look at it go. So if you just held out all day and took these two trades, you probably had a great day, and that's all you needed. But that's the difference between being patient and trying to force something in the middle of all this hogwash here. I guess is the best name I can come up with it. There was a possibility of a lower high right here, but I think that moved a little too far, and this couldn't come back close enough. So, I mean, it's right into the midline, although you've been going up and down. So that one's another possibility. I'll mark it green, but I just think you should wait. You want to be sure you're going lower here. And we just talked about this long on the failed breakout, and it made a new low. Then the second entry short off the correction here, and look at that thing go. That's the trade of the day right there. You actually get another second entry short right here when you would be expecting a possible new low on this. Although this is a retest inside this bigger one, actually it's not, because we already had the break and retest here. So I guess this would stand on its own and you get a break. If you had a better signal bar, maybe you take that trade. But guess where it bounces? Right off that key entry point coming up through there again. And there's a new high here, and you get a first entry and then a second entry. So that's a second entry long. Very nice bullish reversal signal bar. Again, it's respecting that trend line. Look how far away from the EMA. There's another one you can catch, and you probably get a runner on this one, and boom, off it goes. You get a break outside here. That's too congested. I don't think you want to do anything there. And then next thing you know, you're chopping sideways again. But notice you get this failed breakout, which is tempting on its own. It does close back inside, so you might go long there, but really you're better off to wait on the higher low. And it comes right here, and it breaks lower and fails and turns up. I mean, really, you could go long on the engulfing bar. Maybe you wait till this closes. Even if you do, you still got plenty of room, and this thing kind of runs on up and turns down again. I don't think you want to go short here. You need a lower high, and you don't get a chance because it just starts running lower. You get a break, two legs to a new low. Now, before you do, you actually get a first entry, second entry here that breaks higher and turns down. If you took this one, it'd have to be on the engulfing bar because you've already got a new low in place. Huge bar. I mean, 22. You don't want to risk that. Going short at the very low of a move after you've got a break and two legs down. So the only way you could take this is when you put your sell stop here on the engulfing bar. And then, of course, it makes a higher low right here, still a little ways from the EMA. I like that one. And then it just starts kind of chopping sideways. So I don't see anything else you can enter there. Same thing here. You get a break, but it's just a first entry, two leg. And that's your first close outside. Then you get two legs up. It looks like it's going to maybe turn down. And the next thing you know, it breaks higher. And that takes you into 230. This one is tempting as a lower high. But you don't have a lot of room back to the lows right there. And you can see that pretty much a double bottom. And you got the EMA in there too. So you got double support. So it could bounce again. So I think you have to skip that one. And if you don't, you get burned. So and that takes you into 230. I don't see anything else. I mean, let's see what time that is. There's 5 ticks. It's right at, I mean, it's 230. It's not even 231 yet. It is a first, second entry, and you do have a break, and now you got two pretty much measured legs up. So, yeah, you could take that trade right there if you wanted. I'll at least mark it green. You got to be careful late in the afternoon because if you get it wrong, you don't have time to make it up. So, that's why I'm really wary of taking any trades after 2:30, and certainly nothing after 2:45 because the market kind of dies usually right at 3 o'clock anyway and doesn't do anything else. And you can see from 3 o'clock on, you had a little movement there, but not much. And you probably would have been in short. And if you don't get out, then you're stuck in that and you get burned. So just don't take anything after 2:30. I mean, like I said, if it's right at 2:31, 2:32, and you get a great setup, maybe you take it. Because on this, you got two legs up, you got a second entry short, you got a failed breakout, you got 5 tick, very low risk bar. You can get in that with an 8 tick rule. Yeah, maybe you take that trade. And there it is again, spiking channel up. Pretty good trading day, several trades in there. Mostly straightforward today. Not too difficult with trend to find. Some of the setups not too difficult, and it's all about being patient. I talk about this a lot. You got to be patient. You can't look for an entry on every swing. You kind of got to get an idea of what prices are doing. Once they turn down off this high and you know they're trending lower, what are they likely doing? They're likely coming back to the trend line. And when they come here, if they bounce, what are they likely doing then? They're headed back to the midline, and from there, if they can muster it up, they're headed back to the upper side again. In this case, they couldn't do it. They just kind of chopped sideways into the 230 and then sold off a little bit. And it looks like we got two legs down here. There's the first leg that has two legs in it. There's the second leg. So you pretty much got two measured legs down there. And so you want to kind of look at, the idea is look and be able to read this chart and have a good understanding of what prices are doing and where they're going, and then try to get on board with them going in that direction. And if you're able to sit tight and be patient and be very disciplined and only enter when the setups occur, moving in the correct direction, then you're going to have a lot more luck than if you're trying to enter on every swing, which is that's the difference between an amateur and a professional trader. Amateurs are looking for an entry on every single swing. They don't know what they're doing. They're just throwing darts at a board. They may not understand the rules. They may understand the patterns, but they still can't read the chart yet, and they're just throwing darts at a board. Where professionals are looking at this chart, and once prices are heading here, they're waiting for them to come back to this trend line or get a break and a setup for the new retest. And then once they bounce down here, once they're headed down here, when they're going to wait for them to get here and look for a long down here, or another high or low or something to get long with it. And you only had one opportunity to set down here, and if you weren't, you missed that. Then once it gets up, now you got your break and new high, and you're finding some resistance here. So if you get a setup to go short, maybe you take it. And and here you got this spike and channel. You're just waiting on prices to come back to the trend line and give you a setup. But you got to sit patient. You got to wait for the right setup, and it has to be in the right location. If you don't get all three, then you just sit, and you have to. It's hard to do, especially if you don't even know what prices are doing. Your first step is you got to learn the rules, learn what to kind of expect, because price action does not move with common sense, and that's what throws most people off. They come in here, they think they're smart, they got a higher IQ, and they've always been successful at everything, and that works against you because price action does not move with common sense. And so the smarter you are, the harder it is to learn this because you're stubborn, and it's natural because your common sense has served you well in most of life. And so you've reinforced your common sense and your good smarts. But when it comes to price action, it does not move using common sense. In fact, it's almost the opposite. That's why a lot of people finally came in and says, if I just take the contrarian view of everything I think I should have took, I take the opposite trade, maybe I'll have success, and all of a sudden they do. And the reason is because they don't understand price movements and the fact that they don't follow common sense movements. They almost do just the opposite. When you think you should be selling, way down here when it's getting very bearish, that's when you're looking for a buy down here. When it's getting up here and people are finally getting the confidence to buy after they've watched it come up, it's suddenly going down. And then they start trying to get short. Next thing you know, it's going back up. It does just the opposite. So you gotta learn our rules so that you know. And those rules are designed to kind of help you understand price action without knowing it yet. And then once you understand the rules, then you got to learn to read the chart and how to draw the trends and find the breaks and new lows and how to draw the little congestion areas and ranges. And once you can do all that, then it's just about getting experience. You still need a lot, even though you know everything and can see it after the fact, you got to get experience of watching it do it in real time. And that just takes time. And people just don't want to wait. They're eager and but don't be a donator. Do not donate your money to those skilled traders. And if you try to trade too early, too quick, you're just going to outsmart yourself and you're going to be a donator. And, the one rule I got is don't be a donator. Stay on the simulator until you prove you can do it there. If you can do it there using live data, then you can do it with real money if you get your head right. Yeah, there's still going to be a little learning curve when you go from the simulator to real time. because once your real money's on the line, you're going to think a little differently, and it's going to affect you a little more emotionally, and you're going to start making mistakes. So you got to ease from the simulator, once you've proven it, to live real slowly, because there's so much emotional and so much psychological issues involved with trading that people don't understand. Is when your money's on the line, you're going to think differently. You'll either get more relaxed and you'll make stupid mistakes taking chances, or you'll be just the opposite. You'll be afraid to pull the trigger, and you'll be gun shy, and you'll see the setup, and you'll talk yourself out of it, and then you'll watch it, and just about the time you can't stand it, you'll talk yourself into a trade, and it's reversing and going the other way then, just like I talked about earlier. So there's a lot of steps to all this, and it just takes time. So you can't rush it unless you want to be a donator. The market needs donators. The only way you can win $1 is for somebody else to lose $1. So the skilled traders are really good, and they rarely lose, and they need donators to donate to their cause. Don't be a donator. Don't trade live until you know you can do it on the simulator, and then start slow. But anyway, that's enough for today. I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.